Money Talks.
Money Talk.
Money Talks. Money Talks.
Hi, my name is Ibukun Oyedeji, President CFA Society Nigeria. Join me and a host of other financial industry practitioners for Money Talks with CFA Society Nigeria.
Money Talks.
Money Talk.
Money Talks. Money Talks.
Money Talks with CFA Society Nigeria. Let's talk about money.
Hello everyone and welcome to Money Talks. Money Talks is brought to you by CFA Society Nigeria and is a financial literacy program. Smart Uzechi is my name. You can call me Captain Smart and you will be financially correct. My guest on the show this evening is Olufunmilayo Adepoju, CFA. Olufunmilayo Adepoju is the managing partner of Pearl Mutual Consulting Limited, a firm that offers financial advisory, capital raising, risk management consulting, and professional training services in Nigeria. A chartered accountant, her work experience spans various areas of the financial sector, including banking, private wealth management, economic research, business incubation, risk management, and ratings. Funmi has partnered with bodies like USAID and the Alliance for Green Revolution for Africa, AGRA, and in the last 3 years she has leveraged her partnership with those bodies to lead fundraising of over $3 million for women-focused SMEs, which has created more than 500 jobs. Funmi is a CFA charter holder, a chartered accountant, and a certified financial risk manager FRM. And this evening we're going to be talking about smart borrowing, how to make bank loans work for you without regret. And as we do all the time on the program, we'd like to make our guests feel very, very comfortable. And that's the same thing we're going to do for Funmi Adepoju this evening. So let's make Funmi feel very, very welcome on the program this evening. An applause for her. Well, Funmi, good evening and welcome to the program. That's for you.
Hi, Captain Smart. It's nice to be back again. I hope you can hear me.
Oh, yes, I can hear you. I can hear you very clearly, Funmi. Thank you so much, Funmi. It's so good to have you. How are you doing today?
I'm doing well. I'm doing very well. And you?
Oh, beautiful. Very, very well. Okay, we'll just go to tell the listener that if you want to join the conversation, you can call us on the telephone 0700 923 923 923. That's 0700 923 923 923. You can also call us on the WhatsApp number 0817 313 6193. That's 0817 313 6193. You can call that telephone number on WhatsApp as well, or you can just send us a WhatsApp message to 0817 313 6193, including sending us a voice note as well, but keep it short and simple. Remember the subject of our discussion this evening: smart borrowing, how to make bank loans work for you without regret. Because we reckon that so many people go to the bank, they borrow money from there, and in the end they run at a loss. Some persons have their properties seized and all of that. They have nothing to show for it. So you might just want to listen to Miss Adepoju this evening, Olufunmilayo Adepoju, as she brings us insight to this one. So for me, if I can just start here by asking you to tell us the key differences between good debt and bad debt, because we hear those terms all the time, because we're talking about bank loans now. So there are good debts and there are bad debts. Can you tell us what these are and the differences between them?
Okay, thank you so much, Captain. A bad debt is any debt in the sense that is used in this question. A bad debt or a bad borrowing is money that you are taking for a purpose that might not be sustainable. What I mean by that is when someone takes money without actually analyzing how they are going to use that money properly, and or the purpose that they're going to use the money for. So sometimes banks have these products, and they're just telling you, oh, because you already have an account with us, you have access to the loan. And people just go ahead and take that money without really having a reason for that money. You really don't know what that money is all about. It's just like, oh, I have this access, let me go ahead and take the loan. That would be an example of a bad debt. A good debt would be one that's money that is taken for a particular purpose, and it's most of the time, preferably even business purposes. Not that you cannot take consumer loans, you can, but you have to be sure of how you intend to actually pay back, so that it wouldn't give issues at the end of the day. So if I'm to summarize, Captain, I would say a bad debt is one that is taken without proper analysis of how we are going to pay back, while a good debt is one that is taken intentionally, and the borrower is very careful about the purpose of the loan, and they use it for the intended purpose, and they have a well thought out process and idea of when they're going to pay back.
Okay, thank you very much. That's very aptly said. So, Fumi, tell us then, how can responsible borrowing help to improve one's financial situation rather than cause financial stress? Because it is said that it is somebody who doesn't have money generally that goes to borrow money. So they don't have money, they have gone to borrow money to do this business. How can that loan help them to improve their financial situation instead of making it worse?
Thank you very much. I think that statement or that idea that is only those who do not have money that go to borrow money is not so accurate, because a lot of the big businesses that you know, both locally and internationally, they all borrow even though they have money. The good thing about debt is that it has the ability of accentuating or increasing or enhancing your profits. If you take a loan and you're able to deploy it properly in your business or even for your personal activities, you are likely to find a situation where you are able to do more than what you ordinarily can do. And that's where the word leverage comes from. It gives you the opportunity to do what you ordinarily would not have capacity to do. So that's what a debt can do. But loans can also magnify your losses if you are not able to use the money in the way that you're meant to do it. So having given that explanation, how do you make sure that your money, the loan makes your situation better? Again, I go back to the beginning, which is make sure that before you take a loan, you do the analysis. If you're taking money for a business, do a cash flow projection. Understand the kind of return that can come from that business. If you're taking money for a personal or what you call consumer loan, you're trying to take that money for maybe you want to buy a house, you don't have enough money to buy the house. It's better to use the loan and then be paying back gradually. Make sure that you understand the repayment schedule. Make sure that it's something that you're very going to be comfortable paying back. Once you're able to do that, then it will make your situation better than actually making it worse. There's something we usually say in financial analysis, and that's that whenever you take a loan, the return you're going to make, especially for business purposes, the return you're going to make from making use of that money must be higher than the cost of the debt. When the return that you're going to make, that means the return on investment on your business is higher than the cost of the debt, then it's going to make your situation better. It will make your organization to be able to do much more than you would have been able to do otherwise. But when people don't do this analysis, you must do your financial projection. You must check the numbers. The numbers must gel. If it doesn't gel, then don't go into it. You might actually be making your situation worse. Then some people do what we call funding mismatch. You have a long-term requirement. You want to buy a generator for your organization, but you already have an overdraft with your organization, with a financial institution, and you use your overdraft to buy a generator. Because of that funding mismatch, using short-term funds for a long-term purpose, That's what makes businesses suffer. But if you match a long-term need with a long-term financing or loan, you're not going to have the same issue. Let me stop there for now. Thank you.
Thank you very much. And in case you're just joining us now, you're listening to Money Talks. Money Talks is brought to you by CFA Society Nigeria. It's a financial literacy program. My guest on the program this evening, Olufunmilayo Adepoju, CFA, and we are discussing smart borrowing, how to make bank loans work for you without regret. And Fumi, thank you so much. I just heard you now. You have cleared the air, because many times in this part of the world, people like to somehow demonize those who go to borrow money. They say, why are you going to borrow money? Some even will tell you, I can never borrow anybody's money to do my business. I'll use my money to do my business. But it's heartwarming to hear this evening that it is a lie that those who don't have money are the ones who go to borrow money. So you can actually have money and still approach a bank or a financial institution to borrow money for your business. Thank you so much for clearing the air on that one. So you have to go further to let us know the factors that somebody should consider before they go ahead to take out a loan. Or just as you have said now, can anybody just wake up in the morning, you approach a financial institution and you say, hey, give me loan? What factors are there to look out for before you make that move?
All right, thank you so much for that question. The first thing I would like to say at this point is that, there's also this wrong idea amongst our people that, a loan is like their share of the national cake. You must bear in mind that every loan taken must be repaid. So if you have that at the back of your mind, then the next question is, how do you intend to deploy this money? There are two things. I'm talking to two groups of people today. So that's why I'm giving two different illustrations. I'm talking to people who are taking loans for purposes. You're trying to buy a car, you're trying to buy a house, you're trying to do something that requires bulk money that you don't have at once. In that kind of case, it is really your capacity to pay back in terms of your salary or your income level, because you may be self-employed, you may be in paid employment. You have to look at the ability to pay back. Normally, for you to know whether you should take that kind of loan or not, make sure that your repayment amount, that means the amount you're supposed to be paying back on a regular basis, is not more than 30% of your income. If not, you're going to have issues, because you're still going to have so many other things to do. Your family is still going to need to eat. Some of us will still need to pay rent. Some of us will need to pay school fees. So that loan is not the only thing. So the fact that you're going to be servicing. So the fact that your salary is higher than that payment amount does not mean you can afford that loan. If you go more than 30% of your money, if you're spending more than 30% of your money to repay a loan, be careful. If anything happens to your income base, you're going to have an issue. And we find out that someone who is using more than 30% of their salary to pay loans will not be able to save again, will not be able to invest again. They won't be able to manage their finances again. They will be living practically from paycheck to paycheck. Now, for business owners, again, what you need to look at is, what am I using this money for? Is it a long-term purpose? Is it a short-term purpose? Make sure that the bank has given you the right loan. I have a lot of customers that their business, got into a lot of trouble because there was a mismatch, a funding mismatch, and they were given the wrong type of loan. Then number two, if you do not know how to understand the terms that is in the bank, the term sheet or the offer letter that they've given to you, get someone who is financially literate to read it for you, to interpret it for you, so that you have a good understanding of what you are getting yourself into. There is no excuse that, I didn't understand that was what that meant once you take the loan. So it's better to get that education before you actually sign the dotted line and collect the money from the bank. So these are factors that people need to look at. If you're looking at a business, you also need to ask yourself, when we deploy this money, what is going to happen to our business what kind of expansion is going to happen in terms of increased revenue or increased capacity and things like that. You have to look at all those factors so that you're making sure that you're only taking the money that you actually would be able to service in your business. Again, as a business as well, look at the repayment terms. Is it money that you have to pay what we call bullet payment? You have to pay everything at once? Or is it something that you're going to be paying gradually? The way you look at this is important. If you do not have an in-house accountant or CFO, then get a consultant to look at the numbers for you. Make sure the numbers make sense before you commit to it. Thank you.
Phone lines are open now. You can call us on the telephone number 0700 923 923 923. That's 0700 923 923 923. You can also call us on the WhatsApp number 0817 313 6193. 0817 313 6193. You can call us on WhatsApp, send us a WhatsApp message, or send a voice note. If you have something to do with a bank loan, or you're trying to get a bank loan, you need help with getting a bank loan, I'm sure maybe somewhere along the line, Mrs. Adepoju will be telling us where we can get this loan she's talking about and how we can get it. So Fumi, be ready to tell us where we can go and get loan, because I can assure you people have business plans to fund, but they don't have money to fund it. So you can call and ask Fumi just about anything as far as it has to do with how you can get this money, how you can be smart about it, and how you can become richer after you have collected a bank loan and not become more impoverished. Remember, you can call 0700 923 923 923. There's also 0817 313 6193, and that is on WhatsApp. You can get in touch with us, send a message on WhatsApp as well, or send us a voice note. Anyone you choose, that'll be fine. So for me, can you tell us some practical ways with which one can manage loan repayments effectively and avoid a default? Because you have talked about bullet payment. When I get this money, the money has hit my account. How do I not feel this is a windfall? Now money has come. Why can't I take a second wife or buy myself another car? How do we avoid a default when we have taken a loan?
Captain, thank you for bringing that up, because that was one point I wanted to say that I missed out in the former question, and that is the issue of loan diversion. Loan diversion is when you're giving money for a particular purpose, and then all of a sudden you have never had more than 10 million naira in your account before, and then you wake up and you have about 15 million naira or 20 million naira, and then you suddenly feel rich, forgetting the fact that this is money that has to be paid back. So it mustn't be diverted. That is the thing. So there are different ways of managing loan repayment. If you are a salary earner, usually they would have done like a direct debit to your account to make sure that when on a monthly basis the account, there's something in that account to quickly pick it up on the day that salary is paid. If you're a salary earner, please don't sweep money out of your accounts until your loan has been paid for. And if you must move any money out of that account, even if your salary is paid before the debit comes, make sure you leave enough money in that account so that you do not spoil your credit score. You don't spoil your credit history that you have defaulted. It will be there for a very long time. So please make sure that you don't do that. Now, if it is a business, it's exactly the same thing. One of the ways that we encourage people to make sure that they don't default is to create what we call like a debt service reserve account. A debt service reserve account is an account that you put aside, even if the bank has not asked you to do it, to make sure that you always have enough money. You fund that account with money, regularly, so that by the time the repayment time comes, you are able to have enough money to pay that account, to pay that loan. So depending on there are different types of loan. There's amortizing loan, there's the bullet payment. The amortizing loan is the one that on a monthly basis, like rentals, or on a quarterly basis. So you need to know, what your kind of loan is, and fund your account with as much of that money as possible. In fact, if you have a bullet payment that is due for payment at the end of the year, that means that there's no instrumental payment. You're going to pay everything at once. The best way to make sure you don't default is create a DSRA account, that is debt service reserve account. And you're putting the money aside so that by the time the money is due, you're not looking for 20 million. You already probably have almost everything in that account because you have been saving towards it, and you can put that savings account in an income earning account, such that, like a fixed deposit or something that you are adding onto it on a monthly basis, so that you're ready for repayment. We have to be intentional about loan repayment and realize the fact that it has to be paid. So whatever needs to be done, you have to get it done and set up. I hope that helps.
Yeah, quite a lot. And people make mistakes oftentimes when they take these monies that come as loans. Can you help us to highlight some of those mistakes that people make when they're borrowing money, and how they can actually avoid those mistakes that are pitfalls?
Okay, I'm going to use a case study in this situation. Someone was selling recharge card, and a bank gave him like 5 million naira to sell the recharge card. So he was telling his friend, "Oh, I just got 5 million to expand my business." And the friend told him, "You want to put 5 million naira into recharge card business? Let me show you another business, Forever Living Products or something." They just mentioned something else, and the guy diverted the money because they told him, "Oh, you can make this large amount of money." So he took that money and bought something that he had no experience in. It's wrong to take loans when you don't have experience in a particular line of business. Of course, he bought those things that they told him to buy at that time, but as you can expect, after buying those products, he wasn't able to sell them. But the people who wanted to buy recharge card, they were waiting. He didn't have the money, and the bank doesn't care whether you've done what they told you to do or not. You're going to pay back that loan. And that was exactly what the man found himself, having to deal with. So make sure that you do not take a loan for what you do not understand, or you have never, a business that you've never done before. Get experience in the business before you actually, maybe take somebody else's money to do it, so that you use your own money to learn the ropes, make your mistakes before you start taking a loan to expand and go higher in what you're doing. So these are some of the mistakes that people make. Diversion is one key problem that people make, putting it to a different use. Then when there are issues in a facility, for example, you have taken a loan, and then there are changes in the market conditions that are affecting you. Go back to the bank, carry them along, let them know what you're going. If it is a genuine reason, banks are not Shylocks. They will sit with you because they want you to be able to pay back their money as well. So they will sit with you where possible to restructure the loan. I've sat with my customers I've gone with some of my customers to banks, and we've been able to restructure loans in the past. So if you've made a mistake, or maybe there was an external factor that was beyond your control, don't hide from the bank. When they ask you, is there a problem? Don't say, no, there's no problem. We're going to pay you on due dates. Let them know quickly. This is happening in the market. This is the situation, so that if there's a need to restructure the loan, it can be restructured. These are some of the mistakes that people make. Then sometimes overconfidence. Entrepreneurs generally are people that I would usually say they have unsubstantiated optimism sometimes. To turn that around, they have told the bank, within 1 month, we'll be able to finish selling these things. These are the kind of things that the common mistakes that people make. So don't be too overtly optimistic about that business idea. Put into consideration that some things might go wrong. Do your sensitivity analysis. What if it doesn't go the way I want? Build in some things that will make it possible for you to still be able to perform on that particular transaction, even if there are delays along the way. Thank you.
we're fast running out of time, but I'm glad that in speaking to these questions, you have actually answered some of the questions that I was supposed to ask you. But can you just tell us in closing, if you can take this like in a minute or less, the best ways someone can maintain a healthy balance between borrowing and saving? Just very quickly for me.
All right. So I would like to say, instead of just saving, be investing. Because if you are saving and you're not investing, your money is not going to multiply. Have a budget. Whether it's a business or an individual, have a budget. Make sure that your budget includes a portion for unforeseen circumstances. You are able to service your loan and you are still able to invest apart from your regular expenditure as an individual or as a business. If you are able to keep this structure, then it will be possible for you to maintain your financial health, and you will not put either your business or your family or yourself into unnecessary financial turmoil. I think that in a nutshell summarizes what we need to be able to do. Remember that you cannot use all your money that you're making either in the business or otherwise to service a loan. So always work with a budget. Plan ahead for what you're about to do.
Okay, though I say we're out of time, but I have to squeeze in this question. Somebody has sent in a message here. For me, Ade here says, why is it very difficult for banks to lend money to those of us who are starting businesses newly? That's a question.
Very quickly, there are different types of loans that you can get. Every transaction, we divide transactions into two types. We have what we call greenfield and brownfield. If you're starting a business, that's a greenfield. Commercial banks do not have patient capital, so they are not the right people to go to. But in Nigeria, we have Bank of Industry, we have Development Bank of Nigeria. These are patient capital. Examples of patient capital. There's private equity, depending on the kind of business you are trying to do, because you haven't given us enough detail. There are other sources of funding that you can get that will give you a chance as a first timer. But most banks, they don't have that kind of patient capital. Most people, the money they are lending is from current account. They don't have that kind of patient capital. That's why they don't give it. But if you go to Bank of Industry, they'll do it. If you go to the Development Bank of Nigeria, they'll do it, and some other sources as well. Venture capital, private equity.
Okay.
Look at it.
Okay, Fumi, just squeeze in this one. Another question here says, Fumi, did I hear you say if I take a loan and I cannot pay, I can go to my bank and discuss with them?
Yes, I am saying that. I'm not saying when it has become bad, before it becomes bad. When you begin to see that, you see signs that you're going to have a problem, carry your bankers along. You can do that. And if you're having issues, get a financial advisor to go with you. They speak their language. They'll be able to come up with what will make the banks listen to you better.
Charles, that was your question. I hope Fumi has answered. Unfortunately, we have run out of time. We've been speaking with Olufunmilayo Adepoju, CFA, on smart borrowing, how to make bank loans work for you without regret. It's been an enlightening session with you, Olufumi, this evening. Thank you so much for your time. We really do appreciate you.
Thank you so much for having me, Captain. Enjoy the rest of your day.
Thank you so much. You too. That's our time. We'll be back on Monday with a fresh package. Till that time, keep making finance a force for good. Smart Uzechi is my name.
Thank you for joining us on this episode of Money Talks, hosted by the CFA Society Nigeria. Stay connected with us on Instagram, Facebook, LinkedIn, X, and YouTube at CFA Society Nigeria. Follow us for more financial insight and updates. Keep a date with us next time.